let's spend about 2 minutes to talk about, to tee off the Nigerian equities and fixed income markets for the current week. The Nigerian stock market seemed to have defied the negative GDP, second quarter GDP's numbers released a week ago. Ayodeji Ebo is the chartered trader and CEO at Afrinvest Securities. Is joining me now to chew this for just about a minute. Ayo, give us a sense of how we finished off today. We just talked about the stock market, but give us a bit more of a sense of the fixed income market. A lot of activities last week by the central bank. What's your take on the debt market for Nigeria this week?
Okay, thank you. Starting with the fixed income market, we continue to see that bullish run sustained, but towards the end of last week, we saw some bearish form, and we attribute that to investors being very cautious. And part of what we saw in the month of August, we saw there were more structured products also in the market. We saw commercial papers issuances. So that also absorbed some liquidity within the fixed income market. You would also, it's good to also note that at the last auction, we saw an increase in the medium and long-term instruments. Their stop rate also increased. So we believe that we already approaching like the bottom in the interest rate in the fixed income market. And if we look at coming to the equities market, it's been more positive closing days than when we look at it compared to the negative number of days. And as even today, market still closed marginally up. And what we attribute that to is the expectation of positive results. So you can see for the banking sector that accounts for over 45% of total activities in the equities market, we continue to see interest within that space. We know the tier one banks have not published their half-year results, but despite the COVID-19 pandemic, most of them have also indicated their interest to pay interim dividend, which has been approved by their board. So we're all waiting for the final approval of the CBN. And with the other banks that have published their management accounts so far, we can see that that's upside. So it wasn't as bad as we're all expecting. So by and large, we believe that for the fixed income market, we don't see interest rate going significantly below current levels, even as market opens tomorrow. We know we'll see next week there will be PMA auction, and we'll also have bond auction in the month of September. But we are optimistic that the rates, the downward trend in the fixed income market may have subsided. We don't rule out the fact that we know we are still expecting the liquidity level. It will still be very high on the back of maturities. Maturities before the end of the year still close to about 5 trillion. That's very significant. But we believe that investors would also be cautious. Portfolio managers are also looking for alternative with a lot of structured products in the market focused on the real sector. So we believe that they would also use this to as an alternative to the fixed income or treasury bills and bonds markets.
Ayodeji, what are the top issues on the minds of investors? Usually when we get to September, we have the final 4 months of the year. So what are the top issues on the minds of these investors right now as we get towards this critical point in this year's market, considering COVID-19 incidents?
Yeah, thank you. I think the first one is would be expecting that CBN will begin to supply dollars at the higher need window. We know a lot of the foreign portfolio investors are currently trapped in the country. They are unable to repatriate their dividend as well as proceed of their shares. So while investors, we are expecting that by the time we begin to see CBN supply, we may see more sell-off from the foreign portfolio investors. But it's interesting to note that the domestic investors has been driving activities within the equities market. If you check the statistics as released by the NSC, currently about 60% of the activities year to date being driven by local investors. We expect the market would significantly, but we in the high. So it's the current policy that those that are currently in the country, currently trapped, it's not also encouraging new inflows. So if you look at the capital importation reports, you would see that on the quarter-on-quarter and year-on-year basis for equities declined by over 90%, which is very significant. So we are not very bullish, though we feel that based on valuations and expectation for, especially for long-term investors, there's still potential in the equities market.
Ayodeji Ebo of Afrinvest Securities, thank you so much for your time today. We appreciate that. We take a whole look at the market and see what happens as we step into September.